Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Is the economy here to stay? Joining me is Bricklin, Dwyer, chief economist at Mastercard, to discuss key trends found in the Mastercard Economics Institute's Economic Outlook for 2021 report. Bricklin, it's great to meet with you. Welcome to Trade Talks.
Hi, thank you.
Why did Mastercard create this report, and what types of indicators were assessed?
Well, we created the Economics Institute in 2020, which was really about communicating our views to the world on, information and trends that we see, and some really interesting points of view that we're hearing from our customers. So it was really about an emphasis on things we've learned over the years to really communicate that to a much broader audience and really have everybody learn from what we're seeing in the world today.
Let's review the critical trends. Is the economy here to stay?
Yeah, I think that's right. We've seen this huge shift in the future, this massive adoption of digital commerce, of using digital more frequently, a lot more, groups of individuals, older generations using digital. We've seen a lot of investment from businesses moving digital, and that really does seem to create that stickiness factor of these trends sticking around for a longer period of time. So that's one of the core elements of why we think that, this could be a trend that's here to stay.
Are Main Street businesses going digital?
We've seen that. You walk down Main Street today, and even you walk in your favorite restaurant, you're using a QR code to look at the menu. We're seeing that digitization across the board in terms of that retail commerce, that experience as you go to your favorite restaurants that are still open and places like that. So that digital transformation is certainly happening on Main Street, and it's really creeping into something that we saw before the crisis, which was the experience economy, and trying to figure out how customers really get the best experience when they visit your store.
As a result of COVID-19, our homes became classrooms, offices, and gyms. In my case, my garage is my new studio. Do you expect spending on the home to continue in 2021?
So we've seen these massive investments, right? So individuals have moved out of city centers, out of central business districts into more suburbia and even rural areas in some cases. And that's really driven a shift in where people are spending, when people are spending. We've seen spending more throughout the week, less on the weekends. We've seen spending throughout the day and less in the evening. So we really have seen that spending pattern shift. And of course, the behavior, these massive investments of homes and places like that are things that are going to be here to stay. And naturally, as folks moved from the smaller places in city centers to the bigger places outside of city centers, we do expect, the need to basically fill the place that they just bought to be a bit sticky in 2021.
For economies and sectors dependent on travel and leisure, the pandemic has been especially hard-hitting. Do you expect the recovery to be equally uneven?
Yeah, and it goes even further than that. Even within the travel space, it depends on whether you're talking about international travel or local travel. If you're in a local travel destination, you could have ended up doing fairly well in the end. If you're in a big city center like New York City or places like that, that's where people stayed away from. So a lot of the smaller town areas is where we've seen the tremendous amount of growth. We've seen a lot of growth in terms of vacation properties as well, which has been a very hot market. People want to be able to drive to their vacation home now, and that's a shift that we're seeing. So it just depends on what type of travel that we're talking about. But that leisure travel certainly has a lot of legs to it. We see that appetite for demand. On the business side, on the other hand, it's a bit slower to recover, as businesses have been more reluctant to get back on those planes, travel those distances, and like we're talking today, a lot more emphasis on digital media in order to have those meetings.
Well, it makes me wonder too, with investors focused so much on ESG and carbon footprint and so forth, now that we know how to operate virtually, if less time on the road is going to be a longer term trend. I think that's something is interesting to watch as well. But Bricklin, let me wrap this up. Consumers shifted into savings mode and carried less debt than they have in years, which is good for a consumer. But when you look at it from the macroeconomic picture, is it a good thing that we have so much in savings?
So we've seen different groups of the population behave differently. I think that during this crisis, we've seen a lot of wealthier individuals end up with a bit more savings as travel, dining in restaurants have been cut back. So they've been left with a bit more money in their pockets, and that's created the disparity of income that really it's taken very long time for these economies to recover. And so as we think about what's ahead, we see that opportunity in the higher income space of the pent-up demand. We see the opportunity for the lower income, that transitional worker looking for new education, and then jumping on that trend, which is typical of a recession, where we see that education demand and reskill setting, if you will, going forward.
All right, Bricklin, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.